Damon Yudichak here, local CPA, where we reduce liabilities and increase tax returns. What I'm going to talk about today is the most important concept in business, and that term is the break-even point. Pretty self-explanatory. It's the point where you break even. And so why is that important? Well, because we don't want to run a business at a loss. We want at a very minimum break even. So every business needs to be able to sustain itself and provide a profit for the shareholders. So what you have to do is make sure that your revenues exactly equal your cost, and that's the first step. And once you get to that point, then you have to figure out what your revenues need to be in order for you to obtain the type of profit that you're wanting. So let's go ahead, and I'm going to open up my favorite tool, Excel, and show you how this works. Okay, so here we've got the Dunder Mifflin Paper Company, and let's say they just have one cost, and that's rent. Whoops. We're going to make the rent $1,000. All right. So right now, until they bring in revenue, they're going to be having to figure out some way to bring in $1,000. So that lets us know that our first goal, in order to get to the break-even point, is to make $1,000. You can see here that the revenue is exactly equal rent, and our total expenses are $1,000, and that gives us a net income of $1,000. Okay, so then at that point, the next step is to figure out how much money, how much revenues we need to make in order to get our revenue or our profits. So let's figure that. Let's say, hey, we want to make $500 from this venture. So I'm just going to take this 1,000, and I'm going to add 500. So that gives us, lets us know that our rent stays the same. As long as our rent stays the same, so we need to make $500 in order to break even. Sounds pretty simple, but one thing we did forget is Uncle Sam wants some money from us. Whether we like it or not, we're going to have to pay taxes. So I'm going to make some adjustments to our Excel sheet. All right, so we take the same figure before, and we had $500 in profit, but we neglected to figure out that, let's say we're just in a 25% tax bracket. 125 of that $500 goes to Uncle Sam, and then we have 375. So if we're only thinking of this number and not actually our net income number, we can end up running a little bit short. So let's go ahead and figure out what we have to do in order to make that $500 coming home to us. All right, so I went ahead and did the math, and it turns out that in order to get $500 coming home to us, we're going to have revenues of $1,667. We have our rent the same as $1,000. That brings us to income before taxes at $667, and then we pay our tax bill $167, and there we have our $500. A lot of times, what people figure when they're figuring out profitability for the business is they fail to figure out this tax portion. And as we know, the taxes tend to be one of the biggest expenses most businesses and individuals face. So if we neglect the thought on the taxes, then we'll make less money than we're expecting to make, and we could end up being in the red. So that's the information on the break-even point. Check us out at our website, yudichakcpa.com, and hope you have a wonderful day.